Hey, good morning, everyone. It is the first day of December and the market is going down. We've got the NASDAQ under pressure. It's down 0.91. The S&P is down 0.65 and the Dow is down 0.44. What's going on? Last week was such a good week. I think the S&P was up a total of 5% last week, so it was a pretty fun week. Looks like the market was in a positive mood and we had Thanksgiving holiday on Thursday. So following up on a real positive week, no big deal if we sell off for one day, but I just hope that it's not a prolonged sell off. It'd be nice to end the year, if anything, just a little higher. That'd be awesome. Maybe we get the Santa Claus rally this year. I am joined on this stream by Daryl. How you doing this morning, Daryl?
I'm doing fantastic, Victor. It's good to be with you this morning. It's really cold here in Arkansas today. We're supposed to get a big storm, snow, and possibly just sleet. So we're preparing for that. Hopefully,
Yeah,
no electrical outages.
yeah. Good luck. I hope it isn't too bad. Yeah, winter's upon us. First day of December. I think now until early March, right? We're going to deal with cold weather, snow, sleet, all that kind of good stuff, and then we'll start the spring again, and we're off to the races. Yeah, good. So if you are new to this stream, we do analysis, and we're going to look at some stocks. We'll look at the fundamentals, see if they're discounted based on the intrinsic value of that stock, see what their fundamentals are showing. Is the business in good health? Are they growing that top line revenue, showing that more customers want to buy their product or service? Their product or service is so good, they can increase the price. All those things show that that's a valuable business. It's a desirable business. I'm also going to look at profitability, free cash flow. And my colleague Daryl is going to look at the technicals and see how that stock's been trading, see if he could determine if there's something there that would either uh, set up for a good rally higher or if that stock really is going to keep selling off. So I think it's a good combination, and I hope you find it interesting. As we go into the week and the month, this is the final month of the year. And this year has been a good one for my portfolio. I'm sitting on really good gains. And so long as the market doesn't completely crash, I'm going to be fine for 2025. I'm already thinking about, all right, how am I going to set things up to have a good beginning of 2026? And there's a couple of sectors that look interesting out there that we could talk about on this stream just to kind of get our heads around where is there opportunity. But looking at the month of December, what are your expectations on the month and how are you setting up for the new year to come?
Well, I know the first 2 weeks of December, mutual funds start doing their distributions for the year. So there's going to be some selling in mutual funds this next week or two. So that always puts a little bit of a drag on the market in these first 2 weeks. And then, like you said, typically we always have the Santa Claus rally, as people call it, where we tend to run up towards the end of the year. I was looking at seasonality, and it looks like a lot of the seasonality got pulled in from November into October, actually. And then October was pretty much flat for the major indexes. The equal weight has started to pick up some steam, the S&P equal weight. So that means that the market is starting to broaden out into what people are buying and driving the prices up. I know healthcare has done really well over the last quarter or so. So exactly what I expect in December. It's a little bit uncertain just because of the seasonality and the way it was pulled in. I'm hopeful, but cautious.
So as we look at the month of December, let's talk about the things that can make the market go higher, and then what factors can make the market go lower. So we're expecting a rate cut. And I think you and I looked at it, geez, 2 months ago, a month and a half ago, and the chances of a rate cut were like almost zero
Yep,
for December.
exactly.
Fast forward, there's a pretty good chance of a rate cut in December of 25 basis points. And it might even be a 50, but that might be a little too optimistic. If we get a 25 basis point cut, it's going to help. It's going to help. It's not a bad thing, but it's not going to be news to the market. And I'm going to share your screen because I think you want to show something. But if we go 50, holy smokes, hang on to your hat because we're going to rally higher. What are your thoughts on interest rates?
Yeah, so the interest rate talk, I know some of the Fed governors that have been speaking have been indicating that they're supportive of a cut. The biggest one was the New York Fed governor, who is a permanent voting member, indicated that there was definitely, or I don't think he said definitely, but room for a reduction. And he's pretty influential, I think, because being the New York, they typically are their permanent member, voting member. So that
Mhm.
really started the rate cut hopes off, and the market really rallied on that day. I've been watching some stocks that are influenced by lower rates, and they are doing fairly well. I have a couple of REITs that have really picked up since the rate cut discussion started back up, and they had been falling after the October 27th uh, Powell presser, where he said it's definitely not set in stone that we're getting a cut, and it dropped down to zero, and now we're back up to 87.4% at the moment. So
Yeah.
very,
Yeah.
very crazy.
It's it changed, and I think for good reason, right? We've had some employment reports that are a little concerning. Hey, we got a lot of job losses. That's come up. So that's a little concerning. I don't think that inflation has been a big giant problem in 2025. And I think those two factors are probably giving the Fed enough reason to cut because they don't want to get behind on the job losses. If you start having a lot of job losses and you get into an unemployment problem, you're gonna have to cut real fast to get the economy going, and then that's might, from an economy standpoint, they may not like overdoing it on rate cuts. So I think if they preemptively lower rates, get some activity going, might help. There's also one thing I noticed. I don't follow it all that close, but if you look at the car loan repossessions,
Yeah.
they haven't been this high since 2008. And in
Yeah.
2008, we had a world of problems. So that's kind of just a point of like, hey, what's going on with these delinquencies? Is it going to be a giant problem for the economy? It's definitely going to be a problem for some financial services companies and some of the car companies where I think maybe the the car business is going to be terrible for the next couple of years. Not that it's ever been a great business, but I know that that could be on the minds of the Fed. What are you thinking?
This is credit card loans. I was
Yeah.
looking for auto loans, but even credit card, that's pretty high. It's the highest it's been since 2012.
Wow.
So
Look
let me
how high
see
it
if
was
I,
in 2009. Jeez.
yeah, let me, I typed in auto loan delinquencies. So loan vehicles, St. Louis Fed. Well, I'm not seeing it right off the top of my head, but maybe when you're
Yeah, no problem.
talking, I can continue looking.
No problem. Looks like Shadow Guy is wishing us a good stream. Have a great week, Shadow Guy. And it's actually where he's at. He's already middle of his day. So I hope you're having a nice week. Thank you.
Okay, so here's the auto loans.
Yeah, look at that there. Jeez.
This isn't delinquencies though. This is just loans. So I'm still
I'll give you a
struggling
few
here.
minutes.
Yeah.
While you look at that, I thought it'd be interesting to look at what Polymarket's thinking for the Fed decision. And again, we looked at this like 6 weeks ago, and it was completely different. It was like the chance of a 25 basis point decrease was like zero, like 3%. Now it's a 90%, chance based on what people are betting on Polymarket. 1% chance of a 50. So chances are we're going to get a 25 basis point reduction. And that may have been a little bit of the reason that we had stock prices go up last week. And that makes sense. Okay. That makes sense. So hopefully the Fed will come through with that reduction, and it will not be a negative surprise, because if they don't cut, then we're like, oh man, market's going to be disappointed. Not a big deal, but it'll be disappointed. Now, one thing that I do like about where we are with the market is the market was getting really expensive, and having what ended up being about a 5%, sell off. And I think it was disproportionately hitting a lot of these high flying tech stocks. So you saw AMD sell off pretty fast, like 20%. And you saw Nvidia sell off, Palantir. You saw some pretty popular names sell off. I think that's good because it just gets some of that excessive price premium on stocks, lowered. It lets some air out of the balloon, so to speak. So I think that was a very healthy pullback. And now as we rallied higher, it was good to see that we rallied higher with some new industries and sectors participating. That's also good. So it's a healthier kind of market where we could see healthcare stocks rally higher and a couple of other sectors. So if that continues to be the case, that's good news. And we may get that today because we're seeing that the market's going to be under pressure when we open in about 30 minutes. But some sectors are going to do well, like energy should do well because oil prices are higher. We'll see if healthcare catches a bid. Safety stocks, consumer staples will probably do well. Insurance companies probably do well. And money will rotate into those industries and sectors. I think that's good because those stocks, I could find a lot of discounted stocks in those industries. So overall, the market isn't going to perfectly adjust so that it is a balanced market at any one time. In any market, there's always imbalances. In every market, there's always stocks that are priced too high and priced too low. And it's my job to go out and find the stocks that are beaten down, misunderstood, discounted, buy them at the right time, and then make money. That's my job. And it's my job also, if I own stocks that are really overheated, is make a decision on whether I should take some of the stock and sell the whole position, or just, write it out. Selling stocks is oftentimes harder than buying stocks. So that is where we're at with the market in general. And did you find that data you were looking for yet?
I am really struggling trying to find specifically delinquency rates for auto loans. So
no big deal. I think we all get
if
the
I
picture.
find it, I'll post it in the Discord.
Perfect. Thank you. So as it's hard to tell which stocks are going to trade higher or lower, but Nvidia has been under pressure, and I'm actually looking at Nvidia as an investment now. So um, it looks like it's going to be opening down 1%. And I've covered Nvidia in the stream yesterday, and it is a discounted stock. Now, it doesn't have a tremendous discount on it, but I wanted to see if you might be able to look at the charts on Nvidia and just kind of analyze it and tell me what you're seeing. Really like to get your perspective on that. I'll give
Okay.
you a minute to get set up, and I'll just kind of show why I like Nvidia as a stock that, I've already bought a starting position and it went up from there. Okay. Um, the stock is going to have a PE in 2026 of 25.48. And knowing that Nvidia is growing so darn fast, that's a discounted PE ratio. And when we look at the growth, the full year is phenomenal. When we look at the quarterly, phenomenal, excellent. And when we look at the overall profitability, cash flow generation of NVIDIA, incredible. These, I'm running out of adjectives here. Gross margin, 70%. Profit margin, 53%. There are few businesses, period, that are this profitable. And this business is massive. It's massive. It's for the trailing 12 months, they did $187 billion of revenue, and they get to keep more than 50% of it in the form of profit. They also get to take 41% of that revenue and move it onto the balance sheet as cash. So think about the companies they could acquire, the additional research and development they can fund. All those things are excellent. They can buy back shares. All those things are possible. And these guys are beginning to remind me of Apple in a different way, but they have so much cash now that they could start buying back shares and engineering an appreciation curve based on how they manage the shares outstanding. That's what Apple did. They did it brilliantly. And they had a pretty good coach, Warren Buffett. Warren Buffett, I think, coached Apple into what they did with their stock. They did a nice job with that. 39 analysts cover it. They think there's a pretty good discount, 40% discount. Not pretty good. That's a good discount. Now, when I look at their forecast, right, we are operating in the year that's going to end roughly in 2 months from now. And they're going to grow this year by 61%, which is great. And they're going to become over a $200 billion revenue company. And their PE ratio is 38 for the year we're in. But next year, that PE is coming down, and they're going to keep growing at 37 and then 39. And the thing that I keep, the factor that can make NVIDIA go up another 25% is if they are allowed to sell semiconductors to China, boom, we're going higher on NVIDIA because that's a big market. And I'm willing to bet that China would probably, if the US government said, okay, you can buy any chips you want from NVIDIA, China's probably going to buy like in volume. They're just going to load up because they're like, well, buy as much as you think you're going to need over the next couple of years, because you never know when the US government's going to turn off the spigot, and then we're not going to be able to buy them. So it could be a windfall if that is changed. And I don't know if it's going to change. It just kind of doesn't make sense in a way. If you're going to have a good trade relationship, to a certain extent, you need to allow those semiconductors to be sold, because if you don't, then China's going to innovate in other ways, and that may end up being a worst outcome for the US, because maybe they create their own GPUs, maybe they create their own technologies that then compete against NVIDIA. I don't know. That's above my pay grade. I'm just saying that could really be an additional growth curve. And then we have other governments that would buy semiconductors so they can build their large language models. Earnings per share, look at that growth, 46% next year, 43%. These are like make-believe numbers. It's almost like, reality is more incredible than fiction. If you put this company together and you presented it to me 3 years ago, I'd have said, right, yeah, okay, keep dreaming. But then you look at the numbers now, you're like, oh my God, this company has been incredible. What a rise. So that's looking good. Balance sheet looks phenomenal. Let's take a peek at the valuation I have on Nvidia. And Nvidia is discounted by 14%. So if we open 1% lower, it's going to be about 15, 16%. And I'd be buying some shares today because I want to own a piece of this company. I own very little Nvidia right now. I would probably buy another set of shares and just keep growing it. I own Google is my biggest position. Would I buy more Google? Yes, if it got discounted nicely because it's been on a really good tear. I'm buying more Meta, very high on Meta. And in fact, I'd like to see the charts on Meta later in the stream. I'm going to hog up the stream today. I've got to. I haven't had access to Daryl's analysis for a week. Last time we streamed together was a week ago. So there's a little bit of a backlog in my mind of things that I'd like Daryl's comment on. So I'm going to be a little greedy today. So that's my analysis of NVIDIA. What do you think about NVIDIA?
So I've owned them since 2023 and they perform very well for me. What I'm seeing on the charts right now is I see support at around 165. So far, it's resisted getting to that level, but I picked up some additional shares on the 25th, about right here. So I added a few shares. I have a price target of 204 to 208, and I'm thinking that could be achieved by year end. Oops, that's not what I wanted. The RSI has dropped down to a low of around 40, but it has not moved into overbought territory, which is below 30. The last time it did that was at the tariff announcement lows. And since then, it usually holds right around 40. And to me, that's somewhat of a good sign. But it has basically came down since about the 18th of November, tried to rally, and has just traded sideways as far as momentum. We do have a PPO that is also, excuse me here, is also in negative territory. And we did have a bearish crossover back on the 6th of November. I do see that the two averages have peaked out in their differences between the two, and they're starting to close the difference between those two averages, but it's been a slow process. So whether we make it by year end or shortly after that, I still hold this target in place. So I think anything between now and the price now, 177 down to 165, is probably a pretty good buy zone. It does seem to have pretty good support here. The accumulation is still at near 52-week highs. We did peak out on the 30th of September, and the momentum has been a little lower since then, but we're still very, very close to peak accumulation levels over the past year. I
Mhm.
can also see that the money flow has been negative since about the 17th of October. So I still feel good about NVIDIA. I know they've been a lot of discussion here about Google providing the TPUs. Uh, that's definitely competition coming in, but TPUs are very task specific compared to GPUs, and I don't think anybody comes close. They're at least a generation or two behind NVIDIA's technology, anybody else competition wise. So at the moment, I still feel good about NVIDIA, and I'm holding my shares, and I even added a few shares back on the 25th.
Thanks, Daryl. So it's got good support at 165. It's trading as I speak in pre-market at 175. So yeah, I'll probably lock in a trade. And now today we're opening, down. So I'm thinking to myself, do I want to execute my trades early in the day or late in the day? And I'm probably okay executing in the morning. Um, I just don't think we're going to have a big sell off. I don't. I'm a little surprised that we're starting the week, selling off, but maybe there are some investors that had a terrific week last week and they came into this week thinking, okay, I'm going to take some gains and maybe sell a couple stocks, some stocks that are winners and then some stocks that are losers. And then you pair up, the losses with the gains, and you harvest those tax losses. Maybe they're doing that today and getting some of the stocks rebalance in their portfolios. So thank you, sir, for the analysis. It looks like we've got people commenting. Magical Self, I've got your comment on Resmed. We're going to take a look at that. I think it's a good one to look at on a day like this. I'd like to see the market open before I look at that stock. And then James, I saw your comment on VG. We can definitely look at that too. So give us a few minutes and we're going to get to those. I wanted to take a look at Meta, if you wouldn't mind. And Meta sold off quite harshly, starting really on October 28th when they announced their earnings. And the stock really sold off. But last week it started a nice rise. I bought shares, around, this trough, and I'm glad I did so. The market does this with Meta and really offers up an opportunity. When we look at Meta, you look at a business that's growing 26% on the top line, and it trades on a PE for 2026 of 22. So very good growth, great profitability, great free cash flow generation, and you get it at a PE of 22. There are so many stocks that have these really high PE ratios. Palantir, Broadcom, and others, they have really high PE ratios. Meta doesn't. It's 22. That's a really low PE for a company growing 26%, and it's a big company. Analysts do think it's discounted, and there's something going on that I'm very curious to see their next earnings, because the Meta AI glasses have been a big hit. And I don't know if it's going to become a material part of their business, but Meta has a physical AI product now, which is the Meta glasses. And is it going to be a wearable that everybody has to have? Maybe. Right now, like, it's been sold out. Like, I first asked about the Meta glasses about 3-4 months ago. I was at my optometrist, and they have a display there. And I asked, hey, so how have these been? Have these been popular, and have people buying them? They go, yeah, we were sold out. But I have good news. They now have inventory, and if you wanted a pair, you could probably get a pair. This was like 3-4 months ago. And then I was in a Best Buy a couple weeks ago, and they have a very big area where they're displaying the Meta glasses, and it was right at the front of the store. So I don't think that Best Buy is going to put a slow moving product at the very front. They're going to put a hot product at the very front. They want that volume. And I interviewed the employee, asking him, are these things selling? He goes, oh yeah, right now you cannot get a pair. You get on a wait list, we get all your information, and then once a unit is available, we then mail it to you, and then you'll be good to go. $800 a pop. And I guess you tether it with your device or your internet at home, so you can get a digital signal, and then you're able to see on your glasses a pretty much a little display, and you can invoke AI as you wear these glasses. So I'm very curious to see their next earnings and see, is that business becoming a material line on their income statement? Because if it is, I think the market's going to really like that. It's going to rally around that because it's going to be a new product line. We will see. So overall, when we look at a forecast for Meta, we have some analysts that are very, very optimistic on the stock, but even the worst price target out there is 645, right where the stock is trading. And when we look at their revenue growth in 2026, they're going to grow 17.4 on a very big number. Earnings per share is going to increase, not the same rate as revenue growth. And I think because they're spending money on Nvidia GPUs and other things for their data center. So their profitability isn't keeping up with the revenue growth. But that PE ratio, it is coming down fast, folks. And there's just no way Meta is going to have a PE ratio of 21 or 18 or 18. The stock's going to rise. These fundamentals are just too good. You have 85% gross margins, terrific profit margins, terrific free cash flow. There's only one Meta. This is a very unique business that has a network power to use to keep competitors out. Their Facebook franchise is massive and it's very sticky. People are not going to move off Facebook. They have their family relationships pretty much locked in on Facebook. Same thing with Instagram, WhatsApp. I have young people in my family and they use WhatsApp left and right. And I don't use it all that much. I'm not a big mobile phone guy. I'm more of a PC guy. And it's incredible how, the younger generation is just all over these apps. So they're doing great. And their Threads business is doing great. The Reels business is doing great. There's a lot of good things happening for Meta. And it's a stock that I started to buy with this sell-off. The market will offer me these good prices on Meta. I'll take it. I'm very concentrated on Meta. It's the second most valuable position in my portfolio. It's probably an 11% position on my portfolio. So a concentrated position, 27% discount on the stock. I will buy Meta unless I hear something that's concerning based on Daryl's analysis. What do you think of Meta, Daryl?
Okay, so I have a intrinsic value of about 817. That's where the cyan colored bar is. Several weeks ago, we put this auto resistance in place, and it actually held that on the last pullback. So that's really good news. We had this line prior to these prices. It's actually when they started selling off is when we put it in there, and it actually came down and held that. So this is a support line that's been in place for quite some time. Then we had another support line down here, which it did get below during the tariff announcements. but we haven't even come close to that since that particular time. So the 21-day has stopped declining. It rolled over the last 3 days. We've been pretty low volume the last at least 2 days. Looks like 3 and 4, which was most of the holiday week. We were above average, but the last 2 trading days have been pretty low volume, and I expected that in a holiday week. So I've actually been buying shares myself here. And on this day, I don't buy options very often, but I actually bought a call option because I thought I could probably ride this 21-day rolling over. And I did ride it for 2 days and made a couple $100, and it's reducing my cost per share on what I've purchased so far. So I like doing that, and I may consider doing that again, because the next resistance level I see is about 675. So if I can pick up an option, buy another option, and just run it up to that 675, I can leverage a little bit here on this play, because I think it is going back up. So we have resistance here, and then we have another pretty stiff resistance line here that was set in place on the 30th of June. It was tested in September, dropped below it in October, and then broke down below it after their earnings. So the one thing I see here is we did cross yesterday, or last close Friday. We closed above the 50 line. We also have a PPO that had a bullish crossover in bearish territory. And I think we've covered this before, but I want to point to a previous example where that has happened. So we had a bullish crossover in bearish territory. We had a 50-day or an RSI cross above the 50 line. And if we just take and draw an arrow, you can see what happened after that. I don't expect this same level of price appreciation, but we're repeating a pattern that we've seen before. So this is all giving me positive vibes that we're moving back up, but we do have a few levels of resistance that we're going to have to fight along the way. But I'm going to take advantage of this and probably buy another call today, depending on what the stock does. In fact, if they pull back today, they're pulling back $7. So I'll keep an eye on it, and I may do that. And if it pulls back, I'll probably be adding some shares as well along with you.
Yeah, your analysis aligns with, my awareness of Meta. The market on some stocks, it keeps doing the same thing over and over again. It like, has a negative outlook on a stock, sells off, and then people come to their senses, and then it rallies higher.
Yeah.
So it's that's what I've noticed with Meta and some other stocks. Like Google did it this year. It's really flourishing now. And you could say Netflix did that a while ago. And some other stocks may see that type of sell-off that becomes an opportunity. So thanks for doing your analysis. All right. So we are 4 minutes from the market open. Looks like I don't have a stream title just so I could not consume some of the real estate on my name, Shadow Guy. But everybody knows I'm Victor. All right, cool. All right, so let's get into Resmed. Resmed's a stock we looked at over the weekend, and this is a a company that does med devices, a lot around sleeping disorders, sleep apnea, and they make these machines that help people sleep better. So this stock is a medium-sized cap, small to medium-sized, $37 billion in market cap. The PE for 2026 is a very manageable 22.8, pays about a 1% dividend. And this stock has not been working all that great. It does have good fundamentals. It has good profitability, good margins, and good cash flow. And it did have a discount. Let me see what analysts are saying. 11 analysts cover it. They think there's a discount. And looking at their forecast, we are in the year that will end June 30th. PE ratio is supposed to be 23. 22 analysts are putting in their research here. Their profit's going to expand faster than revenue, going up 15%, which looks good. They're going to keep growing. Now, med device in a lot of ways, healthcare tends to be resilient if we have a slowdown in the economy because people need these devices, right? They're going to take care of their health. They want to get a good night's sleep and they buy these products. And oftentimes these products are covered by insurance or Medicare or that kind of thing. So these products tend to be, the demand tends to be pretty consistent for Resmed. So that looks good. I don't think this is going to be a stock that's going to double in stock price like very quickly. Over the 5-year, it's gone up modestly. I think it's a decent idea, and it's down 6%. I wonder why. So it didn't announce earnings. It's under a lot of pressure. Did some news come out that's going to affect it? So when I valued Resmed, I created the valuation over the weekend. I got to a 30% discount. It has good balance sheet with more cash than debt, good cash flows. The value of the cash has a higher value than its current share price by 35%. If you look at the net present value of their cash flows discounted to today's value, and when we look at their earnings per share, analysts were at, I think it was 14%, and the stock market has opened. The discount just got better, 35%. And I think 35% is beginning to look compelling. I just would want to understand, is the market going to start buying healthcare, or is this going to be a head fake? And is my capital just going to sit around? I don't have a med device company in my portfolio right now. It's an industry that I'm not totally in love with because I really like pharmaceutical companies, but it might be a good stock to add. I think it could be a safe stock. I don't like their dividend rate. 1% is kind of low. Maybe other investors feel the same way, but the discount's getting more compelling. So what are you thinking on Resmed, Daryl?
Well, I looked back on the chart for 2 years and found this resistance line that is supported several times. They have dropped below it, and it looks like they're dropping. They had risen above it 3 or 4 days ago, and now they're trading below it again. I do see a support line that started on June the 2nd, was tested here on the 31st of October, and it looks like it's being tested once more. If it breaks down below this, then the next level that I see could be down to 198. The 50-day is declining. The 21-day was declining until 3 days ago. It has turned over and moving back up. But today they're trading significantly below that, so it's starting to pull that 21-day back down. The 5-day is also being pulled down by today's price action. We had pretty low volume last week. That could account for this rise here, just because there wasn't a lot of traders in trading stocks last week. I do see they tried to get above the 50 RSI line, but they're dropping now back below that. If let's see, they are in bearish territory on the PPO. We did have a bullish crossover on the 20th of November. So let's see what else we can find here. The accumulation still looks pretty strong. The money flow is also looking pretty strong this morning. Keep an eye on this level right here. If it drops down below this, that looks to be about 230, 238 or so. If it drops down below that, I would be careful because it could fall some more.
Okay. So it looks like, the healthcare is, for the last couple of years, I rationalize reasons why it should go higher, and then I'm surprised the market just doesn't buy it up. So I'd probably wait. I'm going to wait on Resmed a little bit, and just kind of watch it for a little while longer, just because I'm not understanding why med device is selling off today. Because I'm looking at the heat map, and other companies like Intuitive Surgical are sold off in the space as well.
You want to share?
Yeah. So when we look at the heat map, like here's, med device, and we're seeing some red, and Intuitive Surgical's down. We see some green in healthcare. Okay. And we see some pretty good red elsewhere. But yeah, interesting day. I'm probably going to let this one kind of simmer a little more before I make any decision on Resmed. I'd probably sit it out for the time being. While I've got the heat map up, it looks like Merck is going higher. Pfizer's going up higher. Bristol Myers going higher. So a couple green spots within healthcare. Energy, with oil prices going up. Saudi Arabia announced that, hey, they're gonna hold back some supply, and that is driving up the oil price. So energy companies are catching a bid today. There's some material companies going up higher. We are going to cover a natural gas company in VG, and I'll save my comments there for a little bit later, because VG was under pressure when I looked at it. So consumer staples, when things get a little scarier, investors go into some of these well-known names. Pepsi's picking up a bid, Walmart, so forth. Industrials, mostly red. Amazon's going up a little higher, and I'm not sure what stock that is. So insurance, I was mentioning that earlier. When things get a little rough, insurance tends to be a pretty nice, safe place. Progressive's going higher. Looks like Chubb is going higher. Allstate's under a little bit of pressure. Disney's going higher. Synopsys is going higher because Nvidia decided to invest $2 billion in Synopsys. Synopsys is a company that does when you design a semiconductor, you get to this testing phase where you put this semiconductor through its test cycles to see if it truly is going to perform at the compute levels that were designed. And Synopsys' software enables companies to do that. So it looks like NVIDIA is expanding into other parts of the semiconductor space. And Synopsys is a software company. They do that testing cycle. So good idea. It might be a little more reoccurring revenue that comes, to them every year, as opposed to semiconductors tend to be cyclical. You have some really good years, and you have some low sales years and so forth. So that's what NVIDIA is doing. Adobe's up a little higher. Okay. And we have this week, we haven't covered it yet. We can definitely do that in a little bit. We have a lot of earnings that are going to come out, and a lot of software stocks are going to announce. In fact, let me go to that now.
I see the 10-year yield is rising pretty significantly at the moment. It's up 1.75% right now.
Huh.
So something's going on in the bond market.
Okay. Let's get back to that in a minute. So today we're going to have MongoDB. That's a software company doing databases. And I think you mentioned Credo, which does, are they an industrial stock, creating like electrical components?
They do make a high-speed cable for primarily AWS. I don't know whether I can't remember whether industrials or technology. I can't remember. I could look real quick.
Yeah, no worries. And then tomorrow, CrowdStrike's going to announce. That's a software company. Marvell Semiconductors, Okta software company, GitLab software, and this is Pure Storage. They do storage. And I created a video over the weekend, best and worst computer hardware stocks to invest in, and Pure Storage is in that video. I released it to advanced members, so hopefully you guys are finding that interesting. Box is a software company, and looking at Wednesday, Salesforce is announcing, Snowflake, UiPath. These are software companies. Macy's Retail. Those are the names that I wanted to comment on. And then Thursday, Rubrik, I believe they're cybersecurity software, DocuSign software, SentinelOne software for cybersecurity. Then we have Ulta, which is beauty, Kroger, grocery store. IoT, I think this is is it? I forgot the name of it, but they do the devices that enable machines to be on the internet and communicate with one another.
Samsara.
Sincera, that's it. Thank you.
And Credo is in technology, telecom equipment.
Perfect.
Industry.
So a lot of software is going to announce this week. We'll see what the market does. Is the market going to be in a buy mode? We'll see. Because it's been a rough go with software companies. These are good businesses, but the market doesn't care. It's just been selling off Salesforce and others. I think cybersecurity, not as much, but the known software businesses have been sold off, like Adobe and others. But look at that. They're picking up a nice little bid. Okay. Well, maybe the market's in the mood to buy software now. And I'm watching that closely because I think there's really good discounted stocks. And I'd like to put a lot of capital to work once this begins to work. So we'll see how that goes. And in fact, maybe I could add CRM. We could cover it later. And love to see your comments on CRM. We'll cover it later. All right. So we covered NVIDIA, Meta, Resmed. We're going to cover VG next. Let me just take another look at this heat map. Looks like Eli Lilly is going higher. A little more green in healthcare. Energy is certainly going higher. And the staples are going a little bit higher. Here's the insurance space going higher. Amazon going higher. Amazon's a terrific buy for me. And I'm good continuing to buy it because the market The market doesn't like that Amazon will have lackluster financials, for earnings releases. And in a way, Amazon doesn't use its stock price as the North Star for how they're going to grow their business. They obsess on the customer. They want to make their company stronger, better, more capable, better competitive. And that's what they obsess on. And sometimes temporarily, the fundamentals don't look great. But you got to look at the big picture with Amazon. You can't focus too much on this past quarter wasn't good enough or this other metric didn't look good enough. High level, Amazon's loaded, and I want more shares of Amazon. I don't think I'm going to buy any today, but I've been buying consistently. It's a good stock. Looks like Palantir's going higher. Look at that. Software is picking up a neat little rally today. Look at that. CRM's higher. Adobe's higher. I've been buying into Intuit. Great company. Great business. Very resilient. Intuit's business with TurboTax. Everybody that's been a TurboTax user, which is, I think they got to have over 100 million people using it. They just buy it every year. You don't even have to buy. You just go online and you do your taxes and then you pay them basically your subscription fee. And they do it, of course, after you're done with your taxes. So you invested all that time and of course you're going to pay the amount. I've been a TurboTax customer for 30 years. I know their ways and I get value out of their software. So I'm going to keep buying it. All right. So let me go to the chat and then we're going to get to VG. So Benton, good to see you. Yeah, it's a red day. Last week was fun. Everything was green last week. Bitcoin is down. Yeah, it's down about 6%. It is a risk asset. It's just a reminder. I think you want to look at, is that Honeywell, I believe? So we can look at Honeywell. And looks like Honeywell is down year to date. Okay. You got it. And let's get into these stocks. We're going to go to VG. Venture Global, down a little bit today. Venture Global engages in the development, construction, and production of natural gas liquefaction and export projects near the U.S. Gulf Coast in Louisiana. It is involved in natural gas transport, shipping, regasification, as well as it sells liquid natural gas. Okay. So per barrel prices are higher today, but I'm not sure where natural gas is going. My guess is that it's going down because the stock price is down on this company. I get what they're doing. This is a good idea. Natural gas is it's a good commodity. Man, this one's sold off. I guess they IPO'd this year, huh? So January 24th is when they IPO'd. It's sold off quite a bit. IPOs, man, they're treacherous. IPOs could really sell off. They come in with fanfare, excitement, and they typically do this. I don't know that they go down this much, but they tend to sell off. If I looked at 100 IPOs, at least 90% of them would have sell-off trends in the first year and a half. This is an $18.2 billion market cap company and very low PE for 2026. Dividend isn't very exciting. Energy companies tend to pay higher dividend rates. And that's one of the pluses of an energy stock. This one has a low dividend. Analysts think there's a high discount here. Interesting. What are they seeing that is interesting? So we're seeing the full year, they saw their revenues come down, but now we're seeing revenues really pick up. So what's going on at this company? Why are revenues growing so fast? Did they acquire a business? So that kind of growth, my first guess is they acquired a business. And so these are some of their operations. Here's a big ship that's transporting liquid natural gas. This is where their operations are. Okay. So they're taking on some debt. I'm seeing a couple of different bond issuance. Okay. See if I can look at their latest earnings announcements, see if they have any comments on why they're growing so darn fast. So here's Venture Global. Okay. So they're signing new deals to sell their liquid natural gas. Okay. So the growth is really, really good. But why is their stock selling off? So 9 months, they've grown 170%. So that's really good. Net income went up a lot. Okay. Okay. So the numbers look good. Very good growth. And what I could do is while you look at the charts, I can create a valuation on this and see where it lands from a value perspective. 13 analysts cover it, and they believe this stock should be priced higher. Across the board, everybody thinks it should be priced higher. The expectation on this year, they're going to grow. They really grew fast. There's probably some type of, they acquired an asset, they developed an asset, it started to produce revenues. That's why they took on the debt. And now they're going to get into good growth, but not as incredible as 2025. And they have a really low PE. That's going to change 2 years from now, but it's still reasonable. So interesting. Okay. And let me look at their balance sheet. I wonder how much debt they did accumulate. So here's the debt. So they have debt of $33.89 billion with $2 billion of cash. Debt to EBITDA, 6.84. That's really high. So that is a problem. So you're buying a company that has a lot of debt. And that might be why investors are shying away from the stock. They're like, too much debt. I'm buying into a company that is really indebted, yet has assets, but it's got to pay off this debt. And this is way too high. I have a limit of 3 debt to EBITDA, and this one's way above the limit. It would take 6, close to 7 years to pay this off if they just focused all their EBITDA to pay off debt, which would then starve the rest of the business from growing. They have to put money back into their operations because it has to remain safe. They can't have some type of accident, because then that would ruin the business potentially, and it would create a lot of It would harm people. So they can't do that. So this is a big giant red flag. This is a showstopper metric. With energy, I've already got enough challenges. First, I'm dealing with a commodity. It could go up or down. Second, there's good choices. I could buy into Occidental. They don't have this kind of debt to EBITDA. I can buy into EQT is my favorite natural gas play. Or I can buy Chevron. That's the safest of the three examples that I just provided. And I don't have to take these unnecessary risks. This is too high of a debt to EBITDA. The debt is really spoiling the opportunity here. And maybe that's what investors are looking at. And they're looking at that debt level going, yeah, I don't like investing into companies that have too much debt. And it looks like other investors are feeling the same way. What are your comments on VG?
They have been in existence long enough to start having a 200-day moving average, which is pointing downward, along with a 50-day moving average that is pointing downward, a 21-day EMA, which is pointing downward. The 5-day did bottom out on Friday, and it started moving back higher. Today's action is going to put a little pressure on that. I see that they came down and tested a low that they had not seen since the April 7th tariff lows. So that would be support. It appears to be at this particular point in time. And I would say resistance is probably right around this gap down, the high of that gap down. And the 200-day will soon meet that. So then you're going to have a double point of resistance here coming up pretty soon. The RSI has not been above 50 since the 6th of October. They had a negative crossover, and then it went into bearish territory on the PPO. It doesn't look like it's making any progress to get out of bearish territory. The accumulation is pretty much in distribution mode and has since IPO day. They've been on a steady decrease or decumulation. We had couple months here, 2.5 months or so, where they had positive money flow and the accumulation was in place, but it peaked out right around the high on June the 20th and has been on a downward slope since. Underperformed. Well, we really can't look at that because I don't have a year's worth of data. So if you're willing to take a risk here, I agree with Victor. The debt is too high, but they do seem to have support around 663 or so. But it's a risky one.
Yeah. And it's all about, is that the only stock that sells natural gas? No. You have good choices. So pick the best one, because investors are definitely doing that. They're showing us that, hey, they're picking another investment. I looked, and EQT is down today too. So I just bought some more shares. Look at that. I was sleeping at the wheel. I didn't catch NVIDIA when it was down. So I could think I'm going to have to watch this one a little bit. NVIDIA is going higher. Hey, Salesforce is going higher. Adobe's going higher. Google is under some pressure. Meta. I just bought some shares of Meta. And energy is going up nicely. Looks good. But we're seeing more green. The financial space is catching a bid. We're seeing banks go up in stock price. We're seeing the insurance companies do okay. Regional banks do well. So you said that interest rates are going higher. So maybe.
Yeah, the yields are up about 7.5 basis points at the moment on the 10-year.
Mm-hmm. So that would enable regional banks to charge higher interest rates, is how I'm processing that. And that's why banks are going up in stock price. Okay. So it's a mixed day, but it looks like the market is not as far down as it was earlier. I think when we opened, the NASDAQ was down a full 1%. Now it's down 0.48, S&P 0.28. So we might end up in the green before this day is over because it's certainly moving higher as we go. All right. So as mentioned, this week we have a lot of software stocks that are going to announce. So let's take a look at Salesforce. Salesforce is up, but this has just been a stock that the market is deemed to be undesirable. And what is interesting is that the fundamentals show that this business is pretty darn good. It's a $221 billion market cap company. Salesforce is the leader in customer relationship management, otherwise known as customer experience. Very solid company. The forward PE, which is 2020, the year 2026 is 19.46. And analysts do think that there's a discount on Salesforce. The business continues to grow. Looking at the quarterly, nice growth, 10%. This is a fairly large business. Its revenues are $39.5 billion, looking at the trailing 12 months. And software businesses are profitable and they generate cash. Look at this cash flow, $12.5 billion. Gross margin 77, profit margin 16.87, and the free cash flow margin 31. Now this profit line could be better. I would admit that they should increase that over time. Now Salesforce is investing a lot in their AI business, which they call Agentforce. And you may have noticed the commercials on TV. Matthew McConaughey and Woody Harrelson are like the actors that are coming out in commercials, and they're betting that businesses are going to want to license or use the Agentforce platform to streamline their businesses, and I think it's a good idea. So when they announce this week, that's going to be an area of a lot of focus. Are you selling your Agentforce platform? Are businesses using it? Are they getting value from it? That's important. So the fundamentals look good. This looks like a discounted stock. 33 analysts cover it. A lot of analysts are covering it. A lot of analysts are thinking this stock should be priced higher. And they also contribute to a forecast, 57 analysts. The reason I point that out is when that many analysts are putting in their research, I'm just more confident with this forecast. There's just a lot of people looking. The eyeballs are saying this stock should grow. In the next full year, this stock should grow 9%, 10%, 10%. That's good growth for a big business. And profits will expand nicely. PE ratio is going to come down. Look at how low it's going to get. How can that be possible for a good business like this? And when I look at I'm a stockholder in Salesforce, so it's a discounted stock, nicely discounted. Analysts think it's discounted. I think it's discounted. Really looking forward to their earnings. I think it's going to reveal how well they're doing, or maybe they surprise us and they're not doing well. Stock would go down even further. But maybe it's going to catch a nice rally if they announce really good earnings, especially if they say, hey, we're selling a lot of the AI flavor of Salesforce, this Agentforce platform. We're selling a lot of it. Excitement's brewing. Businesses love it. They're saving money. They're streamlining their operations. That would be great. Looking forward to it. What are the charts showing for Salesforce?
So they've been on a downtrend for quite some time. The 200 days started rolling over on about August the 1st. Yes, and they had started the downtrend the end of January. There were a lot of companies that sold off during February and March, and then we had the tariff announcements, and many companies recovered back up to their all-time highs by end of June or so, but CRM hasn't done that. They keep finding lower highs. Up until the 22nd of October, they looked like they were trying to move back higher, and that's where we attached this trend line. It failed there, came and retested it here, and failed again. So that seems like a pretty solid resistance line, and it's in a parallel path to the 200-day. So if this doesn't hold, then you're going to face some resistance here. So they came down and tested just recently, the end of November, came down and tested their COVID low. Not many companies have done that so far. I also see that they have not gotten above a 60 RSI since the 19th of May. They've been below the 40 several times. There were a couple of months here where they were holding the 40 line, tried to move back up, got to 60, failed, and then dropped back into oversold territory. The PPO is in negative territory at the moment. We could have a bullish crossover in bearish territory. The accumulation peaked out. Looks like at equal values on the 8th of September, the 22nd of December, and September and the 10th of October. You can see that we were trading sideways. It never managed to really break out above a previous high. Since that point, it has been selling off, and it looks like today's action is kind of pushing it downwards as well. Money flow came into positive territory within the past week, but keep in mind we had light volume for 3 days, so most professional traders were not trading last week. The underperformance to the S&P 500 is pretty significant, 40%. To the XLK, it's down 42%. To the software industry group, it's even down 33%, while that industry group overall is only down 6.17% compared to the SPY over the last year. They have some work to do.
So I have a question on a stock like Salesforce, where this year is like no other year, right? If you look at the last 10 years, it's under pressure because the story is, hey, the AI innovations are potentially gonna take away revenues or disrupt or create new competitors to Salesforce that it didn't see before. So I think you're heading in the direction I wanted to get your comments on. Is, having said that, if you look at a very long timeline, what does that show? Is there an opportunity, or is it like, nope, it's still consistent with this downward selling pressure is what it is?
Well, this level that it's sitting at right now has been tested many times. It was almost tested there. It acted as support and resistance in the end of 2020 out through 2021. So let's just draw some trend lines here, that some additional trend lines. I'm going to make this blue because it is an upward sloping trend line. Keep in mind this is pretty short trend line. I'll just make a copy of that, or trend channel. So let me make a copy of that and drag it up to the top. So this one is pretty short, less than a year. This one is almost 3 years in duration, and they have broken below that trend line, and they have not recovered since April. So that's a bit concerning to me. Let's see if there is some other. There might be some support. I'm going to get rid of these now that we've looked at those. Let me turn this red here, make it a dotted line. And I'll just go to this low right here. Okay, how come it's not drawing? Trend line. Okay, there we go. Okay, now I'm going to save that one and just go back into just a year again. Well, maybe 2 years. Well, 3 years. Wow, man, I would not be surprised to see it back down here.
Okay. So the earnings are going to tell us which direction it's going to go. It could go lower, but the earnings could be so impressive it could maybe rally higher.
That's the thing. If it breaks down after their next earnings, man, I would watch out because it could really come down and test this.
Yeah, good to know. And the sell-off that we saw in the month of November, I think it's a good thing so that we just don't have inflated stocks. And we saw that some earnings came in that were really impressive and those stocks sold off, which was a head scratcher. It's like, wow, man, what does a company have to do to have its stock, go up? And I think that was a symptom of, well, the stock price was too high to begin with. And investors are realizing that and they're selling it off the stock. You can't say that about Salesforce. It's not like, oh my God, this thing's been bid up. So if they have really good earnings, I would have to expect that they're going to rally higher. But we'll see. They're going to announce on the 3rd, which is Wednesday after the market closes. And we'll see if they put up really good numbers. If they do, I would expect this one's going to go higher. I'm probably going to buy going into the earnings. I think that Salesforce has been doing all the right things. They've been getting into the space that they're supposed to be in, which is, take their existing platform where if you're a sales executive, sales rep, you're probably using Salesforce's software. And they have other software programs that help with websites, service centers, all kinds of stuff, analytics, that kind of thing. And now they're focused on, hey, let's build this Agentforce platform. And I think it's a good idea. And give businesses this new tool set where they can use agentic AI to do some of the tasks that we would otherwise, give to employees in a call center or a service center, kind of offload some of those tasks, which would reduce the cost to that business. It would give the customer a different experience where they could actually get the answer to their question quicker, 24/7. And those things are all positive. So we'll see what we hear on Wednesday. Looking forward to it. For now, the stock's going up 1%. Good to see that. All right. Somebody wanted to take a look at Honeywell. And Honeywell is under a little pressure. This hasn't been a winning stock for 2025 over the 1 year. Same thing. Boy, this stock has not done well for the last 5 years. This is an industrial stock. They do a variety of products. They're in industrial automation, energy, sustainable solutions, aerospace technologies, propulsion systems. They are diversified. So $121 billion market cap. The PE for 2026 is 18.6, and price target, analysts think it's discounted. When we look at their forecast, all analysts think it's pretty much discounted. What I noticed was in 2026, it's expected that they're not going to grow. And that's, I wonder why. Everything else is green. They're growing this year. They're going to grow in 2 years and in 3 years. But for some reason, analysts, 27 of them, see that they're going to have some type of pause to their growth. That is a concern. And their profits are also going to grow just a tiny bit, but they're still going to be profitable. They pay a 2.5% dividend, so that's not a bad thing. This is a good dividend stock. It isn't overpriced, but these old school stocks are not grabbing investor attention because they just don't have a story behind them. For example, General Electric has been booming because it's latched on, or I should say the market has put General Electric in the AI infrastructure ecosystem. We're going to need General Electric to manufacture more turbines to create the power at data centers. And therefore, General Electric is just booming. Stocks like just setting records. Honeywell doesn't have a story to help the stock go higher. It's just a good company. I can't say anything bad about it. Looks like they've been operating well. They're profitable, but their stock has not done anything. Not very exciting. Looking at their cash flow, I don't know if I have a valuation on these guys. Let me take a look. I don't. So, but I can kind of give you a sense of where they're priced. So they have a little bit of debt. I don't think it's a big giant problem, but they do have a fair amount of debt. They do have some cash. So net debt's 25 billion. It's a pretty big company. They have a lot of revenue. So it's not a problem, but they do have some debt. And when we look at the free cash flow they produce 6.16 billion. And based on their growth rate, I'd probably value these guys at 90 billion or so. And they are trading at 121. So this would be a pass for me. It's just a good business, employs a lot of people, but I don't know that it's a great investment. There's not enough there for me to be excited about. I'd like to buy a stock that's going to double over the next 5 years, and I don't know that Honeywell is going to do that for me. So it'd be a pass for me. What do you think about Honeywell, Daryl?
I'll start off with Fast Grass because they are trading above their fair value. They have traded for the past 4 years right at their normal market multiple, but they are starting to drop down below that at the moment. So this would make me cautious on Honeywell. Then we can look at the long-term chart. We can see that they did have some growth for quite a few years. Then the stock price reflected that, but you can see that has pretty much stopped since the beginning of 2021. So we can start with that, and then we'll drop back down to a year and just see what we see right now. So 200 days declining, that's going to serve as any kind of resistance, just like it did right here. So you're looking probably a high end in the near term of about $200. The 50-day looks like it's leveling off, but it's trading below that, and the 20-day moving average is declining and has crossed below that 50-day moving average. The volume was very light last week. The RSI is in bearish territory. PPO is in bearish territory. It's been in decumulation since the beginning of September, and money flow is negative. I don't have much more to say about this one. It's a little bit overpriced, and it's been trading sideways for quite some time. Be fun to just trade it.
Yeah, you know, in some stocks, they kind of get in a rut and they don't go in one direction or the next. And Honeywell's an old school company, right? So they've been around for a while. I think General Electric in a way, I would say like 10 years ago, maybe less, maybe like 7 years ago, they started to have their problems. And General Electric stock really was a disaster. And good for them. They split up the company in 3 pieces. I think Honeywell may kind of look at that playbook and say, well, looks like General Electric broke up the business into 3 pieces.
I think they've already announced.
What's that?
I think Honeywell has already announced a split.
They're going to divest businesses and kind of say, hey, we're going to give each entity better focus.
Yeah, I think they're following GE's playbook. I think they've already announced that.
Yeah, they should do that because it worked really well for GE. GE had become pretty lethargic. Like the stock was terrible. I owned the stock. I actually owned it during that time, and it was like, man, that's terrible. I always had like high respect for General Electric, but then it got into that mode, and it took a while to get out. So I'm glad that Honeywell has seen that, saying, hey, the era of the conglomerate is maybe over, and you got to focus. You got to create value. Some businesses really do have the discipline of once a business becomes kind of a no growth cash cow, got to sell it. And we'll see how Honeywell does going forward.
So the 3 businesses will be Honeywell Automation, and then there'll be Honeywell Aerospace, and then Solstice Advanced Materials. Those are the 3 business lines that they're splitting into.
That's a good idea. Maybe I'll be interested in one of those businesses going forward. Do you happen to know when it's going to happen?
Let me ask. I'm asking perplexity.
Wow.
So when is the separation expected to complete? Let's find out. Second half of 2026.
All right. Next year, something to look forward to. Look at that. Nvidia is up 1%. Go Nvidia. And the consumer discretionary space is looking green. Guess people are shopping. And I kept myself out of harm's way. I did no Black Friday shopping. I did no shopping whatsoever. The closest I got to that kind of, to shopping was Wednesday. I went and got the pies at Costco. But man, my wife's been ordering everything online for Christmas gifts. And but it looks like consumer discretionary is doing okay for the most part. Energy is doing great. Materials is looking green, and Netflix is higher, Disney's higher, and we're still seeing a little bit of green in the software space. Broadcom is giving up some of the gains it's had. It's really gone up fast. Okay. All right, so we got through the list. Looks like we've got some more comments. 1 second. So, yeah, I could understand the thought that Klarna, which I believe does buy now, pay later, would be doing well with shoppers going out and buying stuff. Maybe they buy the Meta AI glasses and they don't they you know, and they don't have to pay for, I guess they pay for over 6 weeks, is something like that. So we'll look at Klarna, see what is going on out there. It looks like DJ is on. How you doing, DJ? Wants to look at UiPath. I find UiPath to be an interesting company. I'll tell you why when I cover it. And then Shadow Guy. So you bought a Dyson on Friday, huh? So I have a Dyson vacuum, and is it the second one we bought? Yeah, it's the second one. We bought one a long time ago, really liked it. We bought a new one, but I mean, we bought it like, I don't know, 7 years ago. Good product. I like Dyson vacuums. All right. So let's talk about Klarna. This is a new IPO. And they are a technology-driven payments company. Believe they do buy now, pay later and stuff like that. Okay. And let me just make sure to make sure I understand the business. Yeah. So you buy a product, then you pay for it over 4 payments. And you pay for it 4 payments over 30 days or over time. So buy now, pay later. And what I found interesting about these businesses is they're basically, for the longest time, a retailer that accepted Visa, as an example. I'm going to keep it super simple. I know some big retailers have a better negotiation, but for the most part, a retailer would pay Visa and whoever issued the credit card, they would pay 3% for the accepting a Visa card. So you sell $100 product, 3%, it costs you $3 to accept that card. $1,000, you paid $30. So what Klarna is trying to do is say, hey, we'd like to take that 3% and we'll give your shopper the opportunity to buy that product. Say it's $1,000 product, and Klarna is going to earn that $30. And they're trying to earn it and then get paid over the next 30 days. Well, that ends up being a pretty good business, because if you're turning all that, capital, and you're turning it, let's say 10 times a year, 10 times 3 is 30%. You're earning 30% on capital. That's good. That's really good. So that's what they're trying to do. Of course, they have to run it really well. They have to keep their delinquencies down, because if a lot of people don't pay for what they purchased, we got big problems. But the business makes sense to me as I researched it. And this stock is an IPO stock. And you've heard me say this 100 times. I'm probably going to say it another 100 times. I'm careful with IPO stocks. Could be a terrific business. They tend to sell off. Here we go again. Here we go again. This thing issued out September 10th. It's down. They announced their earnings on November 8th. This could be a really terrific business. It's just, again, IPOs tend to sell off. It doesn't matter if their fundamentals look great. In this case here, they do look good. Last full year, 23.5 growth, 32.7 in the last quarter. Very good. Very good growth. And when we look at the trailing 12 months, 17.8%. So they're accelerating their growth. That looks good. Probably signing up more retailers that will accept Klarna. So the performance could be good. It's such a new company. I think investors want to give it some time, get some more earnings reports before they decide to put capital at risk with Klarna. They drive free cash flow. They're profitable. I should say they have good gross margins. They're on their way to being profitable. When they get a little bigger, they'll be profitable and they have good free cash flow margin. So I'm going to show a discount on the stock in a little bit when I show you my valuation. All analysts think it should be priced higher, and I think eventually it probably will be, especially as we see interest rates drop. It makes this business more valuable because, as I kind of simplified what their business is about, if they're if they're having that capital work and they're getting 20 to 30% return on invested capital, that's really good. And in what I think is going to be a period of very low interest rates, it's going to be very hard for banks and other financial services companies to earn a decent yield. These guys are going to be earning a 3% pretty much flat rate. If you accept Klarna, you pay us 3%. Your customers going to, be more willing to buy big ticket items. The retailer's like, hey, one more way to sell. Okay, we're good with that. So the business looks good. I like the business model, and it's expected they're going to continue to grow. So this is a good watch stock for me. It's just too close to the IPO date. I don't want to invest too early because, as I showed, these stocks could really sell off. So it's discounted. So, but maybe in 2-3 quarters, I might be interested. So those are my comments on Klarna, and it's a new IPO. I don't know how many charts you can show, but I'll flip it over to your screen.
The one interesting thing about this chart, I know I've had some comments about people didn't understand what we were looking at on these charts. So just a quick explanation. This is a 50-day moving average. It started showing up on the chart on which day do you think? The 50th day, because it had to collect the prices of the previous 50 days to get that first average.
Yeah.
And now the next day, it throws out this value and adds the close from this value. And the next day, it throws out this one and adds the current day. So that's how these moving averages work. So we finally collected enough data to start having a 50-day. Notice the 200-day still says undefined because we don't have enough data to collect that. You can see like the PPO, this black line is a 12-day average. The red line is a 26-day average. And basically the difference between those two averages as we move through time. So we started collecting part of the data required for PPO right here. It took us until the first day that we had any data for the 26-day moving average, and it was able to calculate the difference between those two and tells me that the shorter average is above this lower average. That's why this bar is above. So it's kind of interesting if you're not familiar with what moving averages are and what a PPO is using to calculate itself. This gives you kind of a picture on how it works. And in a few hundred more days, we'll have all the data filled in and have a 200-day moving average.
Yeah, I was thinking, why do IPOs stocks tend to sell off? It might be because there's a reluctance by investors that use technical analysis to make decisions on stocks. There's no technical analysis available. It just, when you issue out a new stock, there's not a lot of data to feel confident one way or the other. So maybe they wait for it to to be around for a year and a half or so, and then they got enough data where they could see what are investors doing with the stock.
Well,
All
I'm
right.
with you. I've seen enough of these IPOs that you don't want to be this dude that bought it here at 45. There were over
No.
50 million shares traded the very first day at a very high price. So they're paying, $48. And here we are at 33. That's about a 33 to 40% loss right there.
All right. Let's turn our attention over to UiPath. It was a stock that was requested, and I really like looking at this stock for the reason being that I think it's telling me is AI from a business adoption perspective, is it being used? And because UiPath, they provide an end-to-end automation platform that offers a range of robotic process automation, RPA, solutions primarily in the US, Romania, United Kingdom, Netherlands. So you think about some of the promises of AI is, hey, it's going to do certain things that people, it's kind of mundane work, mundane tasks. AI could kind of handle that. Well, UiPath, their business model is to do exactly that. Machine learning, artificial intelligence, and so forth. Now, it's a small cap. They came in with some fanfare, back to the whole IPO thing, right? They IPO'd in 2021, and look at that. Whew. Not fun. If you bought way up here at 80, you are not a happy camper. And over the 1 year, doesn't look all that great. So what's been a surprise around the whole AI ecosystem is the whole infrastructure play has really worked. Nvidia, Broadcom, and others have flourished their stock prices. But where AI meets the actual user, and Google being the exception, because Google does have Gemini that's customer facing. Customers have been using it. Gemini's been doing well. And Google stock now is beginning to really rally. So that would be the exception. But a lot of other businesses that have customer facing interfaces where they're putting out AI, their stocks are not doing all that great. UiPath, Salesforce, ServiceNow, Adobe. Adobe has really good AI products. So this one here hasn't rallied. Its PE ratio is going to come down in 2026 down to 19.69. It's fairly priced according to analysts. And this is what's a big surprise, right? We hear so much that AI is just booming and their growth is decent, right? 14.38. That's a good growth rate, but it should be like 100%. It should be like 80% because first, it's a small number they're growing, and AI is supposed to be all the craze, but it's not. And especially some of these quarters were really surprising to me. It's like, why am I hearing so much buzz around AI? And this company isn't growing very fast. So that was a surprise. They are growing well for the last quarter, coming back to UiPath. This has been a stock that I've been watching because I wouldn't mind being a stockholder under the right conditions. They have very high margins, gross margins. They have free cash flow. I like that. I like those types of fundamental characteristics of a business. They have very high free cash flow. That's great. They're beginning to grow. That's fantastic. Now looking at 16 analysts cover it. And they think for the most part, it's fairly priced. And there's no agreement on what the stock should be priced at. The price targets are from $10 up to $18. Now they're going to announce on Wednesday. So they're going to give us more information. And I think this stock's going to move. Chances are it's going to move higher because it hasn't gone anywhere. It's expected. We are in the year that is going to end January 31st, 2026. And the next year is this year. They're going to grow at 8.79, according to 24 analysts in their research. And then after that, they're going to grow at 7. So this growth is not incredible. Again, this is not the biggest company we've ever seen. And I would think that, man, there's so much buzz on AI. Why are they not growing it by like a big percentage rate, right? They are going to be profitable. That looks good. And the forward PE is going to come down. So there's enough there to see that this is a viable business. They're going to continue to get bigger and so forth. That's fine. But it's not like blowing my socks off, like an Astera Labs that is growing like 100 and some odd % year over year. That is really knocking my socks off. This one, it's okay. It's not a very well-known company. I'd rather buy Salesforce because Salesforce is trying to tap into the AI, business, the AI interest from customers while having a very good established business as well as Adobe. And this one here is kind of a single play on AI. And I would have thought that this one would just be a darling to Wall Street who's really loves AI stocks. Nonetheless, I think Path is a good business. I like what they're doing. It's interesting. It's a right software company for the times. And I think it provides a decent discount. Not a bad discount, but not enough for me to jump in and invest. I will study their earnings announcement that comes out later this week and see if maybe they've become more valuable. They caught better momentum and see if it's an investment now. What are you thinking about UiPath, Daryl?
I went and tried to find some support levels, and the lower estimate I think you provided does provide good support over 3 years, and the upper estimate that you provided from stock analysis is the upper limit, which is kind of interesting. So it trades below those analyst estimates. They are trading below an upward sloping 50. The 200-day is declining. The 5-day is moving a bit higher. While very low volume since the 5th of November. They had one day that was at a 50-day average on the 13th, but every other day since the 5th of November has been below average volume. The RSI peaked out when they reached that upper level of 18. It's been trailing pretty much downwards all the way to the 20th. It has turned over and trying to make its way back up, but it's still in bearish territory. PPO is in bearish territory. Looks like we could have a bullish crossover in bearish territory if the price moves higher for a few days. Today it looks like it's down a bit, so that might just travel sideways. Peak accumulation also happened on the 22nd of September, and it's been trailing pretty much downward since. Money flow has been pretty much negative since the beginning of October. So I see sideways moving price action in this future.
Yeah, it's it's like an example of a company that grabbed the market's attention is Palantir, and there's a big difference between UiPath and Palantir. Palantir grabbed the market's attention because it is growing so fast. And when you grow at these rates, yeah, the market's going to be excited. Like, wow, man, you guys are really growing. Customers love your software. There's a lot of value being gained. And if UiPath obviously can do that, sky's the limit. They can really rally higher because Palantir certainly has. So that's what they need. Easier said than done, I'm sure. All right. So Shadow Guy wanted to look at 3M. 3M has been an investment that I've made, and Buying it at the right time, of course, is the key. I bought it at the right time, and I'm sitting on a good gain. This is a dividend payer, not the biggest dividend in the world. And over the last year, it's up nicely, 27%. It's a $90 billion market cap company. This too followed the playbook of when you become too big of a big conglomerate, it might be a good idea to divest some businesses. And they did that. They divested a business that focused on products for dentists and that kind of thing. And they've made themselves smaller. They also got themselves through some litigation where they sold some ear plugs that didn't work as expected, and servicemen and women had hearing damage as a result. So they had to pay out some sizable amounts, but they got that kind of behind them. And the stock, I really have respect for 3M. It's been a really good business for a long time, over 100 years. They have a low PE going into 2026 at 20. Analysts think maybe it's a little too expensive. What are we doing here with analysts? Only 9 analysts cover 3M. Some analysts believe that it's way too expensive. Some believe, no, it could go up a little higher. When we look at their forecast, I like what I'm seeing. The forecast, 21 analysts and 15 analysts are saying there's going to be growth in 3M. That looks really good. This is a big business. This is a mature industry. So if they can grow a little bit, it's good news. We're not dealing with Palantir, where it's cutting into a brand new part of the economy, selling software that monitors, things for the government. So this is good growth for this type of business. And when I look at the valuation for 3M, for me, 3M's a very conservative investment. I'm going to say a moderate position. It's probably 2% of my portfolio, as opposed to like Google's 13-14% of my portfolio. So I put some, fair amount of capital into 3M. And as I track it, it's well priced. And I think it's discounted by 7%. I have not been buying additional shares into 3M because it's not very compelling at this time, but I'm willing to hold the stock, pick up that dividend. It's a solid company. If we could see them grow a little better, the stock would probably perform better. And overall, 3M's a solid business to have. What are you seeing for 3M, Daryl?
So since all of that turmoil with the lawsuits and what have you, I mean, they bottomed out somewhere around the 2023 at the end of the year. And since that time, they're back up 150%. So they've done well for themselves. They are trading above they're trading today below a 5-day moving average, but it is increasing at the moment. 21-day is also increasing, 50 days increasing, 200 is also increasing. They have dropped over the last few months below the 50-day a few times, but always seem to get back above that. So if you're interested in owning this one, buying at that 50-day moving average is probably a wise thing to do. It looks like they're starting to run out of steam on the RSI. So every price higher here, they're retesting this high 2 more times, but the momentum is lower on both subsequent tries. That usually sets yourself up for a pullback of some type. So if you're interested in this one, I'd keep an eye on that 50-day, especially, or maybe even the 20-day. You could probably start entering on the 21-day, but I would really get interested around the 50-day moving average.
Thanks, Daryl. Looking at the market, it looks like Nvidia continues to go higher, and energy continues to be priced higher as well. And the market's pretty much hanging on, with about a 0.53% decrease in the S&P. What I noticed was stocks in China traded higher in the overnight, and I hold Alibaba and I buy on pullbacks, and I think Alibaba traded higher. Nicely done, Alibaba. This has been a good stock, up 91% over the year to date. So it's been a really good winner, and it's a big position for me. It's maybe 4 or 5% of my portfolio. So it adds up quickly. Market cap 361 billion, P ratio for 2026 21. And these guys are, I think of them as an Amazon in Asia. They do e-commerce, they do cloud infrastructure, they do financial services. So they're in a region that I expect is going to grow quite quickly. And they're strategically positioned to provide cloud infrastructure services for companies that want to do AI in Asia. They are strategically positioned to do e-commerce in Asia, and of course, do the fintech, Alipay, for customers that go on their platform or buy products. So overall, this is a good recipe for success. And forecast, analysts think it's discounted by 16.85. What are analysts thinking for the growth? So company's going to keep growing. We are in the year that's going to end here March 31st, 2026. They haven't been growing really fast, but they have been building out their data center to provide services to companies that want to build AI. And not only in Asia, but some companies in the Middle East are also using Alibaba for cloud infrastructure because they have a lower cost than if you bought from, let's say, an AWS, Azure, or Google Cloud. And looking at the growth going forward, this is a big business, so this growth looks really good. And they're going to expand profits. So overall, Alibaba has been a good one. It's good to see China stocks moving higher. That'll help today since it is mostly a down day with stocks, but it'll help me kind of maintain the value of my portfolio. The discount available on Alibaba is 32%. So I buy shares when we have pullbacks on Alibaba. I use a higher discount rate since it's out of the US for me, but it's been a good one, a real good one. And I'm glad I invested in it. What are the charts showing you for Alibaba?
On this one, it's the 200-day that becomes a buy price for me because it does fall below the 50-day and test the 200-day frequently. It's done it at least 3 or 4 times this past year. So I don't have a position. I will not be entering in. It really doesn't fit my investment strategy, but if I did, it would be at the 200-day moving average. The PPO is starting to move into bullish territory today after being in bearish territory since the end of October. The PPO is in bearish territory, but we do have a bullish crossover today. And for some reason, it's been in distribution since about the 16th of September. Money flow is negative. So I think there's probably a really good opportunity to pick some up at that 200-day at some point in the not too distant future. I don't think it's going much below that. That seems to be pretty good support over time. And just wait for the run, as it's going to run at some point.
Awesome. Thank you. So we talked about Klarna earlier, and somebody, I think it was Benton. Yeah, he's in PayPal. I am in PayPal as well. PayPal is such a discounted stock. When you look at their valuation, right, it's a $58 billion market cap. Revenue's 32 billion. So you're paying less than 2 times sales for a company. That's a very cheap stock. Forward P 11, cheap. Analysts think discounted. Now, they have had low growth for some quarters, but the most recent quarter was pretty darn good, 7%. It's a pretty good sized company. It's not small. 32 billion is pretty good size. So when you're growing by that rate, it looks really good. They drive very good free cash flow. And this is a fintech. They also do buy now, pay later. They have that business in there. They do transactions online. A lot of the checkouts on websites use PayPal. And we've got 23 analysts. They think it's discounted by 30%. I'm holding my shares, just waiting for this stock to start to work. And I think it's going to work at some point because look at this forecast. It's just going to keep going, getting bigger and make more money. The P ratio is going to go to single digits. How is that possible? These are a lot of analysts, by the way. This is not like a couple analysts just getting the dartboard out, throwing darts at it. That's a lot of research. So I'm going to hold on to my shares, and I selectively buy from time to time if the market sells it off. But I'm going to stick to it. And once it starts to work, I'm going to buy more shares because it's highly discounted, 59% discount. That's a really nice discount on a stock. So PayPal, keep growing, keep doing what you're doing. The stock price is going to follow your execution on your business. So that's where I'm at with PayPal. I'd be curious to see what you're seeing on the charts.
Okay, so we looked at this one a couple of months ago, so I need to update it just a bit. We had this downward trend line drawn, but I need to extend it out just so we can see. And it looks like it's trying to make a copy of the 200-day moving average. So it aligns with the 200-day at the moment. The 50-day looks to be leveling out a bit. No, it's still declining. 21-day is declining. 5-day bottomed out about 3 or 4 trading days ago and is moving higher, but it hasn't crossed above the 21-day yet. RSI is still in bearish territory. The PPO is in bearish territory, but it looks like we have a bullish crossover today. And it's been in distribution mode pretty much since the highs that we saw in July. And the money flow has been pretty negative since that point as well. So it needs to break out above this 200-day and downtrend line to start showing some promise here.
Yep. Well, we'll see when it does it. It's been a long time coming.
And notice that the price increases we've seen over the past week is probably due to very low volume.
Mm-hmm.
So I don't necessarily expect this to keep these gains.
Well, the markets are rising. Interesting. The S&P is down 0.28, but it was down much more earlier. And the NASDAQ down only 0.33%. So we're heading to break even, maybe even end the day in the positive. That'd be nice. All right. And the big player on the street is Nvidia. And that really can have an impact on the S&P. Looks like consumer discretionary is up. That's good. Energy's up. So not a perfect day to start the week, but it's not bad. Kind of like, let's kind of get momentum going, and we'll see where those interest rates go. If interest rates were rising, yeah, that could put pressure on stocks, especially growth stocks. So we'll see how that goes. All right,
And
cool. So
the 10-year is even higher than it was earlier. So there's definitely some upward pressure on yields here.
So that means bond prices are going to go down today.
Yep.
It might be a good idea if anybody's out there interested in bonds. Today would be a day when I buy into bonds. When I see this type of behavior, it's a good day to buy into bonds. All right, so we've covered 11 stocks, covered a lot of ground. I think we can land the plane. What's going on with your channel this week?
I released a video yesterday on Cormedic, CRMD. Seems to be getting some pretty good response. So if anyone's interested in my analysis on that particular company, you can take a look at that one. And today I'm going to be putting out another video on just 14 charts and decisions that I'm making on those 14 based on what I see in those 14 charts. So that'll be out today.
So it looks like, Daryl, what's your channel? Can you put a link to your channel, please?
You bet you, I'll get that.
It looks like Shadow Guy is buying into BNDW. Looks like a low risk stock. We'll take a look at that. So this will be the last call, guys. If there's any more stocks, just pop them in the chat, and we'll take a look at them. Let's see what BNDW is all about. Okay, yeah. So this is an example of what I would be buying into today. As you see this decrease in stock price, it just improves the yield. This one yields 4%, and it pays a dividend. Nice dividend of 4%. And I put money over there, and easy to get the money back. If I'm seeing a really good opportunity with stocks, I could sell my ETFs, my bond ETFs very quickly and get that capital to put into stocks. So that's a really good idea. Yep. Very good. Yeah. Thanks for the idea there, Shadow Guy. All right. So last comment is, if you're not a member and would like to be a member, so you can request stock valuations or stock reviews on live streams, consider being a member. I've got 4 levels on my channel. You can visit the home screen of my channel, click the join button. You'll basically see these options. I released a lot of videos for advanced investors. I released one yesterday covering the best and worst computer hardware stocks to invest in at this time. And I do that type of series as well as individual deep dives into stocks. If you want to see what I'm investing in and actively see my trades as I, create videos covering my trades throughout the week, super investors get to see that. And you could also have a 30-minute one-on-one call. And then last option is for somebody maybe with a wider portfolio. They wants to get 3 valuations per month, 3 full researched and reviewed stocks per month. Platinum investors get that level of support. So take a look. If there's a right level for you, it'd be great. And everybody who's a member, thank you so much for your support. I appreciate it. And that is it, folks. It is Monday, December 1st. And
can you believe it?
I know.
Yeah, it's crazy.
Pretty soon we'll be knocking on the door of New Year's Eve, and hopefully we're sitting on a couple percentage gains. Going into 2026, we have a little bit of momentum, and then we figure out how we're going to beat the market in 2026. So Daryl, great job today. Thank you, sir.
Thank you, Victor. It was good to be here.
Wish you a good day and good luck with your trades. everybody, same thing to you. Have an awesome day, terrific week, and best of luck with your investments. Take care, everyone.
Take care.